Hey, thank you all for being here. This is a quick, unplanned, emergency miner video. We're going to talk about some of the crazy stuff that's going on in the market. And it's been a very long day. It's been a very hectic day. It's been a day of breaking news and a lot of things breaking. And this is the first video I'll do today. I'll follow this on immediately in about 10 minutes after I finish this with another one regarding the macro situation, potential Fed pivot news, and how everything is cracking. But just as we always say here, investing is a blood sport, and we're seeing people getting their noses cracked and their teeth cracked right before our very eyes. So with that, let's just jump in and we'll talk about the world's largest Bitcoin miner, Core Scientific. Stock is down 70, 80% today, 95% for the year. Obviously, it grew too fast, too big, too fast, and what to look for to make sure that this doesn't happen again. And as usual, this is edutainment, not financial advice. Let's look at the miners real quick. So here, Core Scientific down 78% today. Argo 14.7%, Bitfarms 6%, Riot 3%, Hut 6%, CleanSpark are one of our top favorites, 1.6%, Hut 4.6%. That is the US, no, that's the Canadian dollar version. You see the difference in currency is kind of hilarious. In US dollars, it's down 6%, and Canadian dollars only down 4.6%. Anywho, Marathon 1 and Hive down 1. Well, Bitcoin is down 1% as well. And MicroStrategy is the least worst of all of these different types of Bitcoin proxies. But let's jump into exactly what's going on and why this is reported by Bloomberg. Core Scientific, again, world's largest Bitcoin miner, warned they will run out of cash by year end, and they could seek relief through bankruptcy protection. It's more than likely it will be a bankruptcy protection option. Their operating performance and liquidity have been severely impacted by the prolonged drop in the price of Bitcoin, the rise in electricity costs, significant competition, litigation, and a perfect poop storm of badness all hitting all at the same time. Now, let's go back to our July miner update on the 13th of July, 2022. I said, red is danger for these miners. This is a compilation of 8 slides that I shared. And you can see here, I was very concerned. The focus of that video was debt levels with the crypto winter and debt loads on things like Core Scientific, Bitfarms, Marathon, and Hive. I said Argo and Hut have a little debt, but not concerned about those. And CleanSpark and Riot are debt-free. And they are the type of firms that get lots of points in our scoring system during this type of environment. Now let's talk about what I call the knife's edge and things we need to look for when we play. And in full disclosure, I own Hut, I own CleanSpark, and that is all I own of the miners because I try to be as risk averse as possible. But this is the key here, and this is why I do all the work analyzing their financials. When the cost of revenue is equal to cash flow, this is the danger zone, and this is a metric from Arcane. Thank the team over there for putting this together. You can see the cost of revenue for Core Scientific, $16.3 million per month, and the operating cash flow is 16.6. So it's a knife's edge. When you have to service debt, etc., it can really tip the balance in the wrong direction. The other one that's in the red zone now on this particular metric is Bitfarms. You can see there they take in about 4.8 million of operating cash flow and have 4.5 in costs of revenue. So this is kind of an issue. The rest are all pretty nicely balanced. Riot, Marathon, Hut, Stronghold, CleanSpark, and Argo. But again, watch for that as we go forward. You'll see that an 80% loss can just be gone in minutes. And again, investing is scary. Now, when we analyze what went on over the last couple of months, you can see, obviously, as debt became much more expensive to service and much harder to come by. Let me zoom out because this is too important. When I talk about that, I have to stress this because this is a microcosm of what's happening in the rest of the world. Okay, the dollar destruction, the high interest rates, etc. The cost to service debt is much higher than it was in January of 2022, and it's extremely hard to borrow money. This is the liquidity crisis that's happening. This will be part of my video that comes after. But let's look at what's happening here with the miners. Cash-strapped miners had to continue to sell their Bitcoin treasuries. They don't want to do this. They know where the price is going. They just need to hang out, but they can't. And you can see here the miners were selling substantial portions of their Bitcoin production every month. And this slowed a lot in Q3, which I covered in my TA Tuesday on Tuesday. But for the first time since May, miners sold fewer Bitcoin than their monthly production. But despite that, you can look here, Core Scientific was selling everything they possibly had every single month. They knew they had a financial problem. Now they have 24 Bitcoin left in the reserve. There's lots of people out there that have 24 Bitcoin or more. There's more than the biggest miner on earth. That shows you how desperate they've been to raise cash just to keep the lights on. We'll talk more about that. But let's talk about the triple whammy, as I see as the triple whammy. This is extremely high energy costs, thanks to the energy crisis triggered by some events over there. We've got a very high hash rate, highest of all time, and it's going through the roof because the miners are jumping in, driving the hash rate up. And we have a sustained low Bitcoin price. Boom, boom, boom. 3 absolute perfect storm of insanity that's really hurting these miners. Let's talk about this as well. This is the miner production cost is now 19,300, but of course that's variable depending on what your electricity prices are and what type of rigs you got. But here the high hash rate and difficulty is pushing this metric to new all-time highs. Like before, back in the good old days, not too long ago, just last year, people were able to mine Bitcoin between $4,000 and $6,000 of Bitcoin. And they were able to sell it at a very insane high amount. Now it's gone complete reverse. Bitcoin price is down and the difficulty is way up. And that is a huge problem. And what kills them is the fact that the price is down for so long. This is what's smashing the miners. Ever since June, they've been hurting, but now they are cracking. So let's talk about this other thing, the cost swell due to power. So this is a cool map from Luxor, from their hash rate index. And it looks at the cost to produce 1 Bitcoin with average industrial electricity cost. Now, if you are in California, you know that it's very hard to get low prices for electricity. And hopefully they cut better deals. But basically anything here red, you cannot mine Bitcoin. That rules out Alaska. That rules out California. That rules out Georgia, New Hampshire, Vermont, Maine, all out of pocket. The places where you can get cheap electricity is little green places up there like Montana and North Dakota and Washington and North Carolina, Mississippi, etc. Texas is even quite high, but sometimes they, depending on how close you are to the source of energy, how vertically integrated you are, you can get much cheaper energy. But this is a very telling sign again. Those people that are hoping to mine in certain places with expensive electricity, it simply cannot be done. And that's the key thing. So let's jump very quickly to the conclusion before I jump into my next video. This is very miner specific. And the people that like Bitcoin miners and have Bitcoin miners love these videos. But for the others, it may not make any sense. But this is a time of miner Darwinism. Okay? Bitcoin price and hash rate are driving everything. More miners will fail. More dominoes will fall. Please study the debt loads and the cash flow of these miners that are out there, if you have any. Those that make it through this crypto winter will do real well in the next bull run. But there will be more casualties along the way. And I dropped some of the names of who need to find either lines of credit, borrow money, sell some assets, and there will be some consolidation. But I don't expect the hash rate to go down. But maybe with some of these dropping off, it might a little bit, but it'll be gobbled up by other members real soon. So thank you for that, everybody. I will see you in about 10 or 15 minutes. Put the next one in the box, and then we will go. Be safe out there. Be careful with certain miners.